Good morning, everyone. Myself, Hitesh Jangir from Mumbai Support. I welcome you to today's webinar, where we are discussing about intraday stock selection with the help of Camarilla Pivot Points. Okay, so I'll show you the flow of today's webinar. Okay, so first we'll discuss what is Camarilla Pivot Points, and then I'll show you the rules of the intraday strategy that we can use with the help of Camarilla Pivot Points. And the third, I'll discuss with the help of examples through the technical query that you can watch of previous sessions, and accordingly you can go through with the strategy. And the fourth one is where the Q&A sessions, where we'll conduct at the end of the sessions for 10 to 15 minutes. So this is the flow of today's webinar. Okay, so first the thing is why I've selected this Camarilla pivot point, because I know this is a pivot point which is, I think it's underrated, because everyone in a market is following the standard pivot points, but Camarilla pivot points is a point where you can use for the trending market. Okay, so yes, so this is first what is a Camarilla pivot points. So here you can see it's a mathematical based price action calculations where you can use on your intraday as well as on your daily charts, but it's specifically benefit for the intraday charts only, where it will show you the support and the resistance for the stocks. So here this pivot points works in all time frames, but it's best in intraday time frame. But when you use on maybe on a 5 minutes or a 15 minutes, then it will give you more accurate results. Okay, so it's help to provide a target as well as a stop loss for the traders. It has different criteria where you can use this pivot points, because it has a 4 levels. When you use a pivot points, it has a 4 levels for resistance and 4 levels for support. Okay, so here it's help to identify the target as well as for the stop loss. So before I start, I'll show you on the chart. Okay, so I'm converting. Yes, so this is the iris. I'm using a white background chart with green and red candles. Okay, so to enable the settings of the pivot, okay, so first you have to right click on the chart, and then you have to go to the chart settings. So here you will get an option, and once you click on the chart settings, there is an option of a chart settings for active chart, whichever you're having a chart. So here you will get a pivot option. So here you can change the pivot type. From here, instead of classic or any other pivot, you can choose the Camarilla, and we have a option, 3 options over here. Show pivot levels, that will show you the lines. Show previous day pivot lines. So you can see on my current chart, I'm also getting a pivot levels on the previous day as well. And the third one, which is show pivot level. So this labels means it will show you the numbers R1, R2, R3, R4, maybe S1, S2, S3, S4. So overall, this will show you the labels. And the fourth one here, you can see, if I want on the left side, I have to click on left. If I want on right side, so I have tick on the right side. So basically I use on the right side. Okay, so this is the setting that you can use on your chart. So this is how you can enable the settings of the pivot levels on intraday. Okay, to enable this pivot on intraday, you have to press Ctrl G. Okay, once you click on Ctrl G, it will enable. Again, if you press Ctrl G, it will be disabled. Okay, so here you can use. Again, I'm going back to this PPT. So here you can see we have the 8 levels. So here when you enable, you get R1, R2, R3, R4, which is the 4 level, and 4 level at the bottom side. Okay, so this is you can use. Now the authentic, we can say the actual Camarilla pivot point is used by when a stock is above R4 and it reverses back to the R3, then someone can go short. Okay, this is the actual pivot settings or the pivot usage. But here I'm coming up with a different concept because I'm looking for a trending market. Okay, so I'll show you the setup, but before that you have to make this chart settings. First you have to enable the candlestick pattern, sorry, the candlestick chart. Okay, the chart type is a candlestick. Second, you always need to use on 15 minutes time frame. The reason, because if you use the 5 minutes, so you will get multiple of time as a whipsaws. So we will use on 15 minutes time frame. Third, we will use a Camarilla pivot point, because today we are focusing on the Camarilla pivot, so that will help you to identify support and the resistance levels. And the fourth is the chart settings, where we are enabling the boring candle setting. Okay, so again I'm going to chart and I'm clicking on the chart, and again I have to go right click on the chart and I have to select the chart display option. And once I select this, I'm getting the fourth option, which is the boring one. Okay, so here you can see I have already enabled the boring setting. Okay, so first question is, what is this boring setting? Okay, basically I always focus when a candle is strong. Okay, so this boring candle defines when a candle's body, like if I take this candle's range from this top to till bottom, if your candle's body is less than 50%, then it will consider as a boring candle. So this totally show you when you have a breakout or a breakdown. If a stock is giving a breakout or breakdown and it's a strong body, then we can expect a good move. But if it's a boring candle, then we are not that confident on that actual trade. So this boring settle that you can enable on your chart. Okay, so before I'm moving further, I would like to ask one question. Okay, so that will appears on your screen, and the question is, which type of pivot you trust more? Okay, so you will have three options: standard, Camarilla, and the Woodies. Okay, so you can share your view, and accordingly we'll move further. Okay, so I'll wait for 20 seconds, then we'll start again. Okay, so I got the poll settings where it shows that 73% are using a standard pivots and 27% are using the Camarilla pivots. So when you see the ratio between the standard and Camarilla, because it's underrated pivot, I can say, because it used for the reversals. So yes, standard is basically used for the trending, but yeah, Camarilla used for reversals. But yeah, today I'll show you one settings where you can use this Camarilla for trending market. Okay, so here I'll show you the actual setup which I used to follow, and the setup is here. You can see these are the rules. First, we'll only go long when a candle is crossing R4, which means if a candle is crossing the resistance 4, then only we have to go long, but with the previous day high, which means if a candle is crossing previous day high with R4, then you can expect a bullish move. Okay, so this is the point one. The rule two is the stock should be at day high or above previous day's resistance, which means if a stock is crossing the previous day's high with the day before previous day high. Okay, like from last 2 days, highest point is crossed by the stock, or it can be a day high. So at that time you can use these levels and you can go for long. And the third is entry should be at a signal candle high and stop loss is same candles low. Like I'll show you with the example. Okay, so here the first thing is cub. Okay, so I'm showing you the data of 27 because of 28 I'll discuss later. Okay, so I'll show you the example of cub. Okay, so here I'll show you, this is the candle. Okay, you can see this particular candle is crossed R4 level with the previous day high. You can see this is the blue color, which is the previous day high. Okay, So at the same time, you are getting a candle is crossing both the levels. So what you can do, you can enter on this candle's high. Okay, so once you take at this candle's high as entry, and you can take this candle low as a stop loss. So whatever the difference is there, because I have already added a spread indicator, okay, which will show you the difference of this particular candle. If a candle difference is more than 1.5%, then you can take a retracement of that candle for stop loss, or you can ignore that candle. It totally depends on you. But yes, you can see here, if I click on this candle, I'm getting a difference. You can see at this bottom, it's a spread, it's a difference. Okay, so at the bottom, I'll take this window. This is the data window where you can see the difference is 1.85. Okay, so we can expect 1.85 points on the positive side. Okay, so the simple concept is when a candle is crossing resistance 4 with previous day high, then we can expect a bullish move. Because suppose if the previous day high is lower than the R4, okay, and if a stock is closing above that, then R4 will be a resistance. So if a candle is crossing both the resistance, then we can expect a good move. Okay, so this is example 1. Again, I'm showing you example 2, which is DLF. Okay, so here I'm changing DLF. Okay, so it's day before. You can see here when a same candle is crossing both the levels. Okay, here. So what you can do, you can enter at this candle's high, 378. Okay, so 378 is the point where you can enter, and you can take this candle low, 374. Okay, so you have a difference of 4 rupees. So you can expect a 4 rupees move on the upper side. So we'll exit at 382 near here. Okay, then again, you can see one more example, which is loop-in. Okay, so I'm changing to loop-in. Okay, so here you can see on the day second candle, here you got an entry over here. Suppose if your candle is small, so you can take stop loss of R3. Okay, so right now, suppose if a candle is small, so here R3 is 688. Okay, R3 is 688.60. Okay, so I'll take 5 paisa lower than the R3 as a stop loss, and I can enter at this candle's high. Okay, which is 692 or maybe 93, 692. Yeah, it's exact 693. So you can enter at 693. You can take a stop loss of 688.60 or 6 or 55, and then you can expect a long move for 4 to 5 rupees. Okay, according to the risk reward ratio. So first you have to follow risk reward ratio of 1:1, and then once you're comfortable, then you can go for 1:2. Okay, so basically when you get an entry on very next candle, then it will give you a momentum move. Otherwise, suppose after waiting for 1 or 2 candle and later it crossed that level, then I think it has very less probability. Mainly I'll suggest if a candle is crossing on the very next candle, then you will get an impulse move. So here you can enter over here, and you can take your 4 rupees like here or maybe here, and then you can exit from that trade. Entry point is 693. You can exit 697 or 698. Okay, then and then suppose if you entered, so you can go with the options or you can go with the futures as well. Because if some person who is looking for the option buying, stock option buying, so what you can do, you can enter here and you can buy the ATM call for long. Or if a person who is a writer, so he can write put below this level, because if this level is there, so if the stock is moved by certain percentage, then it will give you benefit. So you can go for buying or you can go for writing. Both direction are there, because right now we are working on the direction. So here you can take an entry and you can take this low as a stop loss. Okay, so this is the buying setup when a candle is crossing both levels, R4 as well as with the previous day high. Okay, so this is the setup for long with a strong candle. because if a strong candle is crossing, then only you will get a good move. Otherwise, it's quite difficult. Okay, so this is the buying setup. Now, just a moment. So here, these are the bearish rules. Okay, so for bearish rules, you have to find out a stock where strong candle is crossing S4 with previous day low, because we are looking for a bearish trend. So if a stock is crossing S4, which is a support 4 with previous day low, then we can expect a good negative side move. Rule 2, stock should be at day low or below previous day support. Okay, which means if a stock is crossing 2 days lowest point, then you can expect a good move. The third rule is the entry should be at signal candles low and stop loss is same candles high. So here I'll show you example. First is the PD line. Okay, so I'm going to back to Iris. Okay, so here you can see, here we got a candle is crossing that level, but according to my some settings, it will give me here. Okay, this will also show you, but I have added some of the indicators, so that will not give you result over here, but yes, here. So you can enter at this candle's low and you will get a good move. So here you can take this candle's high as stop loss, and you are getting a difference of 18 rupees. So you can at least expect 18 rupees negative side move. Okay, so this is your entry point where you can see a sharp fall. So this will work for you. Okay, so this is a bearish stock. This candle high will be your stop loss. You will enter at this candle's low, but it should be on the very next candle. Okay, you can maximum wait for one candle, max here. If you are not getting a stock till here on the next two candles, ignore that stock, because that will not give you an impulse move. Okay, so it's better to go with the very next candle. And if a very next candle is crossing that low, then you can easily expect that move. So this is the example 1 of the bearish trend. Second is the TVS motor. So here I'm changing TVS motor. Okay, so here you can see if a candle is crossing both S4 and with the previous low, so you can expect a good negative side move. So you can enter on this candle's low, and you can see on the very next candle it crossed that level, and within that candle you got your target. If a person who is buying a put, he can take your put till this level, and if a person who is writing, then he can write the upper level call, which is 1150. Okay, so overall both direction you can trade, but yes, it will give you a good result when you are going with the futures or the intraday equities. Okay, if you want to go for the futures, you just entered here in the future trade, like it activated in equity, so you can take trade in the future as well, and whenever your target or SL hit on the equity, you can exit from the future trade. Same for the options, like suppose if you entered over here and our target is like from here, it's 7 to 8 rupees. Okay, so once it reach your 8 rupees, you can exit from the options. Okay, so once your equity hit your target, you exit from options or you exit from futures, but you need to give focus to the equity only, because we are running only on equity FNO. Okay, so yeah, yes, so this is the example 2. Now I'll show you the example of yesterday's. So here we got first example is ABB, which triggered at 9:30 max sell signal. Okay, so here I'm giving you ABB. Okay, so here you're getting a signal of ABB. Okay, so here this is a very long candle, but you can see here this candle is satisfying both the criteria. So what you can do, if a candle is long, first option you can ignore. Second option, you can take a retracement. Okay, so for retracement, you can press R and just take 50% of a candle retracement. Okay, so I'm taking this candle high and low. Okay, and here I'm taking this. So if I entered over here on the very next candle, this will be my stop loss, 50%. And the same risk reward ratio you have to follow. So suppose if I'm getting here 30 points, okay, so I have to wait for 30 points for the negative direction. So this triggered yesterday at 9:30. Okay, now second example is Petronet. So here Petronet. Okay, same way, because when you trade on the day's first candle, it always a long candle. So you can take the retracement of that candle. So again, I'm taking 50% because I can see this candle is more than 1.5%. So I can simply take retracement of this candle for managing the risk. Okay, so if I entered over here on this candle's high, so this 205 will be my stop loss. So you can see here I'm getting 2 rupees, so I can expect a 2 rupees positive direction move in futures or maybe in equities. But yes, you can see a positive direction. Then again, I'm getting Tata Chemical. Okay, so I'm checking. Okay, so you can see this is a very, very long candle, because you can see your level is here. It's if you go for long or a short, it's better if you're getting near to that area, but this is too long. Okay, so in such kind of trade, you can ignore this candle, or you can see, as I discussed earlier, if a candle is crossing on the very next candle, then you have to go enter, because that will give good probability. Because here you can see this candle doesn't break the previous candle's low. Okay, so you can ignore, fully ignore, because we already got 2 signals on the same candle. Okay, then you can go. Then Xinjiang is there. Okay, so here you can see this candle break the signal candle. So here, what you can do, this is a long candle, but you can see a candle is crossing both resistance as well as the previous day high. So what you can do, you can take retracement again the same way. Okay, and then you can take this candle high and low. This is your stop loss 600.75, and you can take your entry point at 605, and you can expect 608, 609 as per the risk reward ratio. So this stock moved as per the direction. Then again, BPCL is there. Okay, so here, yes, this is a trade where you can see your stop loss. Okay, so once you enter this trade, and you can take your stop loss, like this candle is low. Okay, so here 308 was the entry point and 306 was your stop loss. But unfortunately, on the very next one, it break the high, but it took the stop loss. So what you can do, if you want, you can take your reverse trade, because whatever that you taken the risk, okay, that you can recover with the reverse trade. Okay, so stop loss can be possible, but yes, we have the maximum probability where your stock is crossing both the resistance, the R4 and the previous day high. Okay, so this is a stop loss trade where you can reverse your trade, you can go short, you can take this high as stop loss, and you can recover your loss. This is BPCL. Then again, Gujarat Gas. Okay, so here you can see this trade was not triggered, because on the very next candle, or maybe the next 2 candle, is not triggered the single candle high. So this is a ignorance. You can say we can ignore this trade. Okay, so now the next candle, the next trade is in the copper. Okay, so here you can see this candle close below both the areas. Once this low breaks, you got the rally. It's a bearish trade. Okay, then this is IndusInd Bank. Next is IndusInd. Okay, so here you can see we got over here, but unfortunately on the very next two candle, it doesn't break that candle's high, signal candle's high. So we will not take the long trade. But if someone who's taken, then yes, definitely you have to take the retracement for the stop loss, and you can go for the reverse trade if stop loss hits. But this was not in a criteria. Okay, then the next trade is Coforge. So if you run this query, you will get these results while the previous day, and here at this bottom you can go short and you can take this higher stop loss for the negative direction trade because it's a negative trade. And the last one is the VDL. Okay, so here you can see VDL, because as I told earlier, we can go only long when a stock is crossing the day's low. So here it doesn't satisfy that condition, so we'll ignore this trade. So overall you can see when a condition is satisfied as per the query, then you will get the results. So for that, suppose if you want this query, okay, it's already in your download files. Okay, just a minute, I'll show you again. I'm exiting this one. Because I actually run the action replay. I'm starting Iris again. Okay, so here you have to go to file, you have to go to download files, and here you have to go to miscellaneous. Okay, click on the get file list. Okay, so here you will get today's webinar file. Okay, so here you will get a query, you will get a screen, you will get a PDF. Okay, that will be written as 029 webinar. Okay, that you will get in this miscellaneous option. Or what you can do, you can, yes, so what you can do, you can directly contact us on our support for this query file and the screen or the PDF. Okay, so we'll assist you, but yes, we'll upload as soon as possible by maybe within the 5 minutes, and you will get that option on your miscellaneous. Okay, and also we have our next week, on 12th, we have a paid webinar where Rutuj Vichari will share a masterclass especially on the Nifty and Bank Nifty options. Okay, so it's a paid webinar, so you must attend this, because if you are Nifty or Bank Nifty lover in the Bank Nifty options, so that will give you a good idea and that will help you in your trading system. He will share his own strategy and also he will share his views on the market. So you have to go through this and also install our Insight mobile app. Okay, because that will give you notifications of the live market as well as when you run the technical query. When you run the technical query, at the bottom you can see we have an option of send to mobile number. Okay, so here if you put your register mobile number and if you click on this, so whatever the result is, whatever the result appears in your technical query, that will be forwarded to your mobile app. Okay, so first you just enable that and put it your number and then click on the live query, then that result will be sent on your mobile notifications. Okay, and for this webinar you can also register through the mobile app, or you can simply call on this number 8976991603 and /09. So we'll forward you the link and accordingly you will get the seats.
I have also shared the link of paid webinar to all of you, so you can directly click that link and join that webinar. Thank you, Hitesh, for sharing your great knowledge with us and with all the attendees. And do not miss the masterclass on Nifty and Bank Nifty. So I have shared the link and do register this webinar. Thank you, and that's all for today's webinar.